Welcome back, everyone. So I'm seeing key divergences in the stock market. I think it's really important for everyone to understand what this means in the future. So stay tuned in the video. I'm going to show you guys exactly what I'm looking at. So we'll start it off here with the S&P 500 heat map. And this is a very common picture that we've seen recently, where we've got pretty much the entire market selling off, showing weakness. Red basically across all the sectors, and the FANG stocks here and the tech stocks, but mainly the FANG stocks are the only strength in the market. So that is a very common picture. We're seeing divergences between basically continued divergences across the board between the market and the tech stocks. So here's the S&P 500 up little under 0.5%. But the S&P 500 is heavily weighted, almost 20% is the tech sector, and the tech sector, for the most part, is the five or six FANG stocks. So if you look at equal weighted S&P 500, and I think this is a good exercise people should do just on a daily basis, RSP is an equal weighted. So now each component of the S&P 500 has equal weighting. And this shows the real picture of what's actually happening in the market under the scenes. So if you're just looking at CNBC, you see the headline number with the FANG, heavily tech-weighted S&P 500, but the equal-weighted shows the rest of the deterioration of the rest of the market. And so this is down 0.5%. So the FANG weighted stocks are up 0.5%, and the equal weighted are down 0.5%. So again, divergence between the rest of the market and the FANG stocks. You can see it even more prominent here in the Qs. Qs is up 1.45%, but of course the FANG stocks, I think Apple and Microsoft makes up 40% of this sector, and then the rest of the FANGs basically. So this is pretty much just a FANG index, and it shows that 1.45%. If you go to the equal weighted Qs, it's not as strong. Tech is obviously still strong today, but you can see equal weighted is less than 0.5%. So all the strength today is coming in the form of the five, six FANG stocks. And that is concerning. It's just continuation. It's of the narrowing of the market breadth. It's just a crowding into the FANGs. There's a ton of money piled into these five stocks. And so I'm looking for opportunities, obviously, to short these, but nothing's there yet. And, I don't, there's nothing here to short the FANGs yet. We have this uptrend line right here in the triple Qs. You can see it right there. And I really want to see a break of that level. When that breaks, that's going to be the sell signal that I'll be looking for an opportunity to short tech. Until then, it's bullish, it's strong. There's nothing to short. However, I'm not interested in jumping on board with the narrowing of breadth. I mean, there's all kinds of technical indicators that tell me that this move is coming to an end, although price continues to move higher. Negative divergences right here in the RSI and the PPO. You've got negative momentum basically. So price is moving higher on less and less momentum. This is the Johnny-come-latelys. What I see is this move. These are the bag holders. There's always, every move, whether it's down or up, towards the end of the move, you've got the people who just throw all reason to the wind and they just jump in. And I think that's what you've got here is these are the bag holders that are late to the move. The people who are buying in here, obviously you can stay long. You're well into the profit and you can just stay long until the trend changes. But if you haven't taken a position, I just don't see this as a time to jump on board. I look for the other move. And the IWM, which is the Russell 2000, has no FANG stocks in it. This is just small caps, is down 0.5%. So you can see that the rest of the market, besides anything with FANGs, any indice with FANGs, whether that's consumer, discretionary, the communication sector, anything that has a FANG stock in it is skewed heavily by that FANG stock. But if there's no FANG stock, and you know, Facebook, Apple, Microsoft, Amazon, Google, Alphabet. If there's no, if there's none of these FANG stocks in it, then there's weakness across the board in the sector. So again, you're seeing the small caps selling off. And this is how I'm currently shorting the market and shorting the weakness that's actually in the market that's being hidden by the FANGs. So you can see here 156.20 is really the resistance that I have on the hourly chart. You got it here on the hourly. You can see support, kind of held in support right here. Then it broke down and you can see resistance right there, resistance there. It's chopping through it a little bit. So it's starting to lose some of its importance, but we're below it again. So 156.20 is where I'm kind of tracking as resistance, looking for this thing to roll over. Hasn't done it yet. I haven't seen, if I go back to the daily, I'm not seeing the big impulsive sell-off with volume, and that's what I'm looking for. So until we get that, this is not a all-in short for me. This is just a kind of a starter short until I start to see some signs that I can add. Here's a stock to look at here, Adobe. Now, I was short this previously, and I cut that short. I explained that in the video. Cut it a while ago, actually, but now it looks like, and what I said in that video is it looked like it wanted to do a back test, looked like it was running up for a back test, and so I was looking to short it again at that back test, and now we're getting really close to having that back test. So here's the uptrend in Adobe on the daily chart. So a nice, daily chart is longer time frame chart. And you can see that we've been just walking up this trend line. We broke that trend line right there. Here's your breakdown. You did a back test. You did one back test. It looked like you were going to fail, but then it held and it popped it again. It looked like it was going to fail again, and then it held. I cut the short right there. And it continued to be defended, and it had two opportunities to roll over, really three. I had an opportunity to roll over there, another opportunity there, and another opportunity there. Failed each time. So at that point, I wasn't interested in being short. It had proven that it didn't want to go down yet, and now you can see it's impulsively running up to do a full back test of this trend line up around, if I can zoom in here, it's gonna, probably come in around, if we get there today, 536. If we get there tomorrow, 537. Somewhere right in there is the back test. So what I'd be looking for, here's the hourly chart. I'd be looking for, if it wants to run up there and tag it today, I'll probably take a position I'll probably short this thing today. And if it wants to do it tomorrow, maybe after the Fed announcement that they've got, then we'll look at that. The market is leading up to the Fed, the market is buying into the Fed, but the Fed news or the Fed announcement might come as a sell the event moment. Maybe there's nothing really changing in the announcement. The market's treating it as if it's big news. Maybe it ends up being nothing, and so the market's overpriced, basically. So we'll watch that. But there's a potential opportunity to short this thing on a back test. Okay, and once you're able to peel your eyes away from tech, because tech's really stealing all the spotlight, we can look at some of these other sectors to find what's really going on, outside of tech. And here's XLV. We had this bearish rising wedge right here, and it broke, and it's just gone sideways as of right now. But so we haven't sold off impulsively, but we're not moving higher either. So watch this. What this looks like it wants to do to me now, it could run up into a back test, or could start to roll over. But I think it wants to run down to this 97. Looks like that's what it's going to do. Whether it goes a little higher first and then rolls over. So I'm watching for some sort of sign that this is making the move down to 97, and I'll probably jump on board. XLF, financial sector. Here's your daily chart, uptrend line right here. And you can see we broke, did a back test, starting to roll over. Nothing impulsive yet. Here's the hourly chart on the XLF. So nothing impulsive, but it's being rejected. So tomorrow after the Fed, maybe there's some movement in the markets, and we'll get a better idea of whether these are going to, play out and continue to show weakness. Now, if XLV and XLF start to sell off, and you've got the small caps, you've got the equal weighted S&P 500. You've got all kinds of things showing weakness except for tech. Then watch for tech to roll over. Now, you know, until we see the signs, there's nothing to do there. Tech's not rolling over. So let's look at NVIDIA. This has been another strong one. And what do I got? Well, on the hourly chart, I've got this, you know, it's a bearish rising wedge. It's not a very steep wedge, but it is wedging. And here's your March lows. You can see reaction here, and then on the highs, we've got several reactions on our way up, and we're just kind of creeping along the upper end. So, you know, it's a potential short here if you wanted to, but with tech being so strong, for me, I'm looking for the bigger move. I don't want to just catch a little move down to the bottom of the wedge. I want to see a breakdown of support, and I think there's plenty of opportunity and money to be made when this finally breaks, when tech finally breaks. Then I think it's better to just wait for the clear signals at this point, since tech has shown such strength. You know, when this thing breaks, the money's going to come flooding out of tech very quickly. So there will be an opportunity to short some of these tech names. We just need to wait for it. Here's PayPal. You can see this is the strength that we're seeing. Here's the March lows. We've got a reaction down here, and then as we zoom up, reaction here, several reactions right in here. It broke, but because tech's been so strong, it doesn't go anywhere. It just continues to move higher right below support. So this is not what you want to see for a breakdown, and that's why when something breaks support, you want to see impulsive selling. You want to see multiple, you know, masses of people trying to exit the trade quickly. And we just didn't see that. And so that's why this was not necessarily, you know, a great short, basically. Netflix is ripping higher today. I have no idea on what news. It doesn't really matter. But ultimately, here's what we got. Looks like it's going to do a back test. So here's the March lows in Netflix. And you can see you've got a reaction. And as we move up, it starts to get, you know, the trend line starts to get chopped through. But we sold off. And that was that was a pretty impulsive sell-off. If you go to the daily, you know, 3 down days, 3 solid down days, that's pretty impulsive. It had increasing volume. The volume wasn't huge on the selling. And then, you know, one day they're ripping it back. This is what happens when you have low volume moves. It can be faded, you know, pretty easily. So ripping it back. So maybe they're coming up for a back test. So I'll look at that. That might be a potential short, you know, on a back test of this trend line right here. Looking at the daily, you know, you don't have really negative divergence in Netflix. Right here, you made a higher price, and that was a higher RSI than previously. So there's no negative divergence. Now, it is there in the PPO, you can see right there, nice clean negative divergence, but you don't have in the RSI. So just something to take note of. And the way I'm looking to play what I think is going to be a correction. And again, this market is fueled on a lot of speculation and, you know, Fed money printing, and there's just a lot of hot air in the market. So a correction, it doesn't have to be a 5%, 7% correction. Correction could be a 25% correction. You know, these corrections, just like the moves up, the corrections could become a lot larger. And I think that's maybe the phase of the market that we're in, is where each move, each trend is going to be a lot larger than you think. And that's true with the upside too. You know, this upside move that we've had has been huge. But the way I'm looking to play it is I'm going to start buying some volatility, UVXY. I'm not going to do it here. I don't like the price right here. If I go to the hourly, this is a bullish falling wedge, and this is what volatility does. It spikes higher and then grinds lower, just like the market. The market crashes down and then grinds higher. So volatility has been grinding lower really since the March highs, March lows in the market. So this was the move in volatility. You know, you had a move in UVX from about $11 to $130. So over 1,000% very, very quickly. And then it fades off. And so what I'm looking for is bullish falling wedge right here. There's a couple things. If it wants to remain within this bullish bullish falling wedge, then I'll look to maybe start adding small little amounts at support. So down around 18, I might buy a little bit. And then as it continues, because you don't know when it's going to spike. The way I play it is I just add, little, I just kind of start to buy it little bits at a time as it hits support. And then eventually you get the spike and it works out. But you don't know when it's going to spike. So I buy it at support and I'll just continue to do that. Now, if we get some sort of big move down in volatility, then we've got this lower trend line right down here. Let me zoom out. You can see reaction here, reaction, reaction. There's this lower trend line all the way down at like 1450. And so that's why I'm not sure. Right here, this is a bearish rising or bullish rising falling wedge, but it could break down to this lower support line down here. So that's why I'm not going to be buying large amounts. And if it breaks down, I'll add a little bit, and then we'll look for that big move higher. So that's something I'm going to be doing here, depending on how this plays out and continues to sell off. So let's look at some oil stocks. ExxonMobil got kicked out of the Dow, so it's showing some weakness. Here's what I got on ExxonMobil. I've had this trend line up on this chart for a while. I've looked at this in some other videos, and this is a stock that I'm interested in owning longer term for the dividend, but I've been waiting for them to cut the dividend, and I don't believe they've cut the dividend yet. The reason why I would wait for the dividend cut is you have a lot of dividend investors that are in this stock. When they cut the dividend, or if they cut the dividend, they'll exit the stock will sell off, and then you can find some real value in the stock because you'll be able to buy it for a good price. So I've had this trend line, this support line at 41.20. It's about 41.25 for a while, where I got that is you've got this gap right here. This was the gap when we started crashing back in March, and then we popped back up to it, and we've just chopped around it. So it started to establish support though over time. You can see support right there. Again, support right here, support right here. And now we've started to break down. We undercut it there. It held support, but now it's making the move, it looks like. So if this holds and we start to get like a daily close, you can see you haven't really had a daily close since back in April below this support line. So if this starts to break down, looks like it's going to head down to this 30, basically retest the March lows, 31, 36, and make a double bottom. And that's something that should take, people should take note of that. If stocks are starting to make double bottoms and tech continues to diverge higher, I think that's, something to pay attention to. Now here's Chevron, which has not been as weak. Chevron didn't get kicked out of the Dow, but still doesn't look like that strong. You can see obviously the recovery, but then it's just gone sideways. The one thing I want to point out, and actually it's in ExxonMobil as well, island cluster reversal pattern. See it right here? You've got this island right there. That's your island cluster reversal. So it gapped up to make the island, and then gapped down. That created the island, and then you basically have never recovered and have continued to sell off. So that is showing a reversal pattern, and if you took that on the short, you haven't really made a lot of money, but you haven't lost any either. It's just gone sideways. So Chevron, the support line here is, I don't know, somewhere right in here maybe. It's not that clean really, maybe right in there. It looks a lot like Exxon, but it doesn't have as clean of reactions on the daily chart. If I go to the hourly, you can see, yeah, it's somewhere right in there. So a breakdown below, I would say just benefit of the doubt, just give it a break below 81, 81.50, a nice solid close below that, then that should set this in motion to start rolling over. And again, probably the double bottom scenario. Going back to ExxonMobil, I'll just show you that island cluster top. There it is right there. Okay, so that's all I got today. That's all I got for this video. If anything happens, I might put out an end of the day video after I've had some more time to review some of these stocks, getting us set up for the Fed announcement tomorrow. Thank you. Catch you on the next one.